South Korean index, that's also seen a sharp decline of 1.4% in the morning trading session.
The VIX jumped about, 11%. 10-year yield lost about 7 basis points.
It's about 80 points down as we speak.
FOMO is the worst reason why you should take any decision in the market.
The cap is a cap. The ceiling is a ceiling. Okay. So it's not something that, people have to really pay for that.
Warren Buffett, he has created the highest trough of cash at this point of time ever. And, he's the only person who doesn't care what happens in the near term.
Startup like a Zomato, right, can actually build an application and enhance their customer experience by building that experience into ChatGPT.
Our idea was to bring the benefits of space technology to the common man of the country.
You should expect to see margins improve with every passing quarter.
Industries and companies are getting above the 80% capacity utilization mark, and that will be a trigger for greater investments.
Fundamental attraction of India will trump everything else.
Well, that was the day so far. A 200-point rally from the lows is what we saw on the Nifty. The Nifty is above that 25,500 mark. A good recovery. I'm Mangalam Malu from the studio, and with me is Nigel from the venue of Global Leadership Summit, which is still happening. Nigel, see a lot of people, a lot of energy, a lot of activity around you. Is it lunch? Is lunch getting over? What's the scene?
Well, that's what, Mangalam. It's a bit of a lunch break that's going on, and I think we're almost done with that. But, as you said, the environment over here, the entire feel over here is absolutely electrifying. A lot of buzz, people of all ages, all parts of, the market as well as industry as well are here. Big event, Mangalam. Looking forward to having you back here later this evening.
Let's do that, Nigel. And in the meanwhile, what we do is we have 1 hour to go for trade to end. And what a day it has been, actually. From the lows, we've seen a sharp recovery, not only for the frontline index, but as expected, from the throes of that 20-day moving average, it's the Nifty Bank which has actually seen the biggest pop. The low on the Nifty Bank today was closer to 57,100. So from there, it's an 800-point pop that we've seen, closer to 58,000 for the Nifty Bank. Mitesh Thakkar joins us once again. Mitesh, you had in the morning indicated that maybe the Nifty Bank looks like a better long trade than the Nifty itself. But boy, that has worked. The Nifty's actually rallied a fair bit from the lows, and it's been led by the Nifty Bank. What's the strategy now?
Yeah. So I think, good afternoon, I think in both the cases, what is important is the fact that, the Nifty kind of hit the support 25,400 to about 25,350. That was the level, and we went slightly below that. And Nifty Bank, the support was around 57,250 and then 57,000. So we didn't hit the second support. So clearly, the Bank Nifty remains in an outperforming mode. But having said that, I think, looks like a good kind of bounce back would happen, because we have now had about, from the highs, nearly 800-point kind of a pullback. And this 25,350 is a decently important support. That's where the, a couple of retracement levels as well as the recent historical gap level come. So I think bounce back is expected. Now the challenge will be what levels can we scale on the upside. So my first target is around 25,650, 700. If we clear that, then I think we'll have strength back to the markets. Otherwise, it will still be a market which I would be, kind of wait and watch mode. Having said that, on the stock side, I have one buy and one sell. Indus Tower is a buy with a stop at 398 for targets of 415. And ABB is the negative or the sell side call. Keep a stop just above levels of 50.71 and look for targets of 49.20.
All right, we take that point. It's been a recovery, but the Nifty recovery has to sustain above the 25,600 mark itself. Let's also cut across to the CNBC-TV18 Global Leadership Summit, which is currently underway. Shireen Bhan in conversation with KB Kamath, who's obviously the chairman currently of Geo Financial Services, but a legend in his own right.
Since your operation. And all these are critically important today, and even more so when you're talking of, I would say, a technological revolution that you're all going through. So this is absolutely the correct move at this point in time.
Correct move at this point in time. Another possible move is the consideration to enhance the FII limit for public sector banks, which is capped at 20% currently, to 49%. The PSB view is that this gives private sector banks an unfair advantage when we talk about FII participation. It doesn't actually dilute equity at all. Why not do it?
I entirely agree. The playing field has to be level. Why should there be a playing field which is different for private banks and different from public sector banks. Over the last whatever number of years you want to count, the public sector banks have played a major role in the banking system, and I don't see that changing. So you need to have a level playing field going forward.
You know, while we level this playing field, so to speak, Mr. Kamath, what gives you the most confidence about what we're seeing in the banking sector and in the larger financial services sector? When we last spoke, you said banks don't need to worry about other banks. They need to be worried about what's happening on the fintech side. They need to be worried about tech companies who are also doing banking. As you look at the landscape and how much it's changed today, where do you find confidence and where are your concerns?
Yeah, my biggest confidence is the fact that what gives me the biggest confidence is the fact that the bank balance sheet is clean. If we were having this conversation in a situation where bank balance sheets are not clean, profitability is not at healthy levels, then we would have probably gone in a different direction. So banks are strong, and banks can today compete. So they have capital, they have people, they have understood how to use technology. So they have all the elements. What is required is to understand how the new player, what I call the new co, any fintech or any player which is not a bank but is agile in using technology, how are they acting? And make sure that you keep pace with them. That is a challenge. So that challenge exists, but I think it's a challenge you can overcome. And that's where I think in another session that I was having with one of your colleagues, I said that banks are spending money, but they need to spend it where, in a competitive sense, it is most productive.
Which means to actually acquire capabilities, to acquire some of these new cores that you spoke of?
No, not necessarily. What I mean is to put in the right technology that is appropriate for today, rather than do more of the same thing that we were all doing over the last few years.
Yes, so to disrupt yourselves using technology. But, what we've also seen happen over the last few years is the retail participation in the India equity story has picked up very significantly post-COVID, and it's been a very secular rise across the nation, fueled by domestic participation and domestic capital. Has that surprised you? And given the unlock that we've now seen happen, what is the kind of headroom for growth that you foresee?
No, I think the India story is driven by 2 or 3 things. I think, firstly, it is the long runway that we have. So that gives you headroom. If you did not have a 25-year growth runway, and why do you have that? Because I would think most of India is still to be built. That act of building itself provides the momentum. Again, you look at how growth has happened in other domains in the last 30, 40 years or 50 years. Japan first, Southeast Asia, tiger economy, Southeast Asia, China. You see the transformation journey starts with building what you don't have. And that itself propels you to a status where the next leap becomes easier. I think we are well on that journey. So that headroom we have. Then comes the question that is often asked, where is the capital?
Yes.
I think now we have clearly shown that that question has been asked for now at least 30 years that I have been in banking. Not the 50 years I was in development banking, but the 30 years that I have been in banking, that question has been asked, but where is the capital? I think the India story is what I would call a very measured growth. The government has always been careful to make sure that we grow at a pace which we have the ability to support. But today, I think we can grow at a faster pace because the access
What is a faster pace, sir?
I would say that we should actually aspire for a 10% growth rate. And then we will achieve 8%. So that's what we need to do. And also, and I'm very happy that the index is being reset of, say, industrial production or various indices, because we will then have a better picture of at what pace are we really growing. I would think that we're probably growing a little faster than what we all assume.
Than what the numbers reflect at this point in time. Yes, and that review is, of course, underway at this point in time for metrics that measure inflation as well as growth. But, Mr. Kamath, you talked about this aspiration of getting to 10%, and you said if we aspire for 10, we'll probably get 8. If you were to look at the landscape today and the measures that have already been taken, This year, the effort seems to be to boost consumption. We saw the income tax cuts, and we've just seen the indirect tax cuts by way of the GST. What next would you prioritize to really get to that 8 to 10% number?
See, I think we have to get on to what I call a virtuous cycle. Consumption is one part of that virtuous cycle. Investment is the other side. And the question could be, where do you invest? As I said, that's where the long horizon comes in. So you've got enough to invest. And as GDP goes in, aspirations change. That's the third part of it. So this keeps the momentum going. Now, again, historically, we would, that rhetorical question that I said, but where is the money to fund this? And that question has now been answered. Now, a classic case that I would is to say how this got addressed is NHAI. NHAI, we used to I'm talking of NHAI, say 10 years back or so. How will NHAI fund all the highway needs of this country? Just didn't seem possible because it would otherwise take a larger and larger portion of the budget. But today that issue is a non-issue because what they have already put in place is now getting tolled properly. And that tolled road is now you create an unit out of it, and you have a funding which is not thought of or could not even have been conceived of 5-10 years back. So basically, we are creating new avenues to fund ourselves. And all this without necessarily looking at foreign capital. If I look at last 5 years, most of our growth has come through domestic capital, unlike most other domains. So we have got a lot of levers to push. We are on that virtuous cycle, and I think we will keep pumping at a good pace.
Okay, all right. We'll keep coming back to Mr. Kamath as he's highlighting that, bank balance sheets, well, they are very, very safe. They're looking in very, very good shape. He's going on to focus that we need to aspire to grow at a faster clip. And then maybe, in fact, we'll be in that vicinity of around 8 to around 10% or thereabouts. And he believes that the economy is in for better times or so. We'll keep coming back to that conversation. For the time being, let's welcome Dharmesh Kant onto the show. Hi, Dharmesh. Good afternoon. Good to see you in. You've got 45 minutes before you get into the weekend. So for the time being, let's continue to focus on markets and then you can focus on the weekend. Let's highlight the two sectors of the day. At the start of the trading session, I'd highlighted that the finance minister's comments will keep two sectors excited. One is the capital market sector, and you have BSE. That's flying away in today's trading session. If I saw it correct, that one's up close to around 10%. And the PSU banking names as well have done well. What are your stocks that you like from both these two themes? Because clearly, they're the sectors of the day.
Yeah, good afternoon, Nigel. I mean, both the comments were encouraging, be it finance minister or the SEBI chief, for the capital markets. And it's a very constructive sector. And I also heard NSE chairman saying about how the penetration growth has been into the capital market. So as far as capital markets are concerned, it's more what we are liking, more of an infra place. And the exchange place like BSE, MCX, and CDSL, NSDL, and the registrar and transfer agents like AFIN and CAMP. So there is a highest weightage should be there, 60% or so, and balance you can have in AMC place. We are avoiding brokers for the time being. So direct executors, trade executors, we are not liking that. So overall, net the things are going fine for this space, and it's likely to be there for 3-5 years. As far as banks are concerned, I think now it's a consensus trade across the board. Everybody, every fund manager or analyst is liking the space, and valuation is still comfortable for them. And the growth trajectory for Q3 and Q4 sounds very interesting, having the NIMs stabilized and the advances growth picking up. The ground level checks do suggest it. We are liking public sector banks quite a lot, and there our topic remains Bank of India. It has done well, and it's still doing well even in today's market. And then for the private sector banking space, I think Axis Bank stands a chance. It does. It stands a merit out there in light of, say, SDFC and ICC because of the valuation comfort and the Q2 numbers which spanned out. So any correction out there should be bought into. And if you want to take a punt, I think IndusInd Bank is shaping up right to have a good momentum play. Setting in the new management under the leadership of Mr. Anand Bakshi is doing pretty well. And I do think its valuation is comfortable. So that is one for brave hearts. If you are willing to take a risk there, one should be getting into IndusInd Bank as well.
All right, that's the word coming in on IndusInd Bank. Even the financials are doing a lot better in today's trading session than what we would seen in the recent past. So Bajaj Finance, Bajaj Finserv, we've also seen the listing of Piramal Finance, the relisting of that. Good commentary coming in from Anish Shah as well, and that's taken the stock of M&M fairly higher today. M&M has moved to the high point of trade. But let's go back to the comment that came in from the finance minister on FNO and the reason why which all these capital market stocks, including the likes of BSE, are doing a lot better in today's trading session. So the government is not here to shut the door on FNO, has been the word that came in from the finance minister at the SBI banking conclave. Come back and then we continue our conversation.
उस पैसा को कुछ और रास्ता में लेके जाना मेरा इरादा नहीं है. जिस रास्ता में वो जाना चाहते हैं वो उनका मर्जी. सरकार रास्ता बदलने के लिए नहीं, मगर उस रास्ते में जिस तरह के नुकसान हो सकता है जो आप विस्तार से बात कर रहे हैं उसके ऊपर, उसको अवेयरनेस के द्वारा बातें करेंगे या प्रोग्राम करेंगे, गांव-गांव तक जाकर बोलेंगे भैया संभालो आपको इतना नुकसान होगा, वो सब कर सकते हैं. मगर वो रास्ता किस रूट में जाना है वो बोलने का मेरा अधिकार नहीं बनता, ऐसे मैं समझती हूँ, क्योंकि पैसा उनका है.
The block deal window has been reviewed comprehensively with changes made to price bands and to the minimum order size. We are also committed to introduce closing auction framework soon, aligned with other global jurisdictions, but suitably designed for our requirements. We are focused on deepening our cash equities market to spur capital formation. An active securities lending and borrowing scheme is critical for improving price discovery and facilitating interlinkage between the cash and derivative segments.
All right, so those were comments coming in from both the finance minister as well as the SEBI chair speaking at the Global Leadership Summit here at CNBC-TV18, and that caused a flutter among all the capital goods stocks, capital market stocks, and look at BSE, that's moved higher as well. But what's also doing well are a couple of these insurance names. So HDFC Life, SBI Life, LIC, all of them doing well. Dharmesh, you have a view on the insurance space. Is there anything particular that you like here? The LIC chair spoke to CNBC-TV18. The results weren't particularly bad. That stock holding up with a gain of almost 2.5%.
Yeah, Dr. Mangalam, we have been liking Life Insurance Corporation of India for a while, and we have been recommending that stock even on declines. I think the results were pretty good. The market was expecting a degrowth, whereas they came out with a VNB growth as well as a VNB margin growth. And the net AUM also increased, and it's the largest, mammoth kind of a company out there. If it's growing at that pace, it's quite credible. At the same time, I would like to point out that valuation-wise, is 1/4 of the valuation multiples, which is SBI Life or HDFC Life or ICICI commands. At the same time, their return on equity is more than 45%, as when compared to others or 10 and 15% of the like. So I think the only overhang out there is the government holding, the promoter holding, which will definitely come. The supply will keep on coming out there, and that's what is keeping a hang on that. But to my mind, if you are holding a life insurance company or any insurance company, the time horizon should be 5 to 7 years. And from that perspective, it's a multi-bagger. We are seeing a price target of, say, 3 years down the line around 2100. That's our fundamental price target for Life Insurance Corporation of India. So we are liking this as a top pick out there.
All right, so LIC is your top pick out there. What about two-wheelers? We're awaiting numbers from Bajaj Auto right now, but Eicher Motors is doing well. We're seeing some traction build in TVS Motors as well. TVS Motors actually, in terms of valuation is higher than all its other peers, but at the same time, it's got better margins, and this additional kicker coming in as well, where they'll sell about 288 crore worth stake in Rapido. Not too much in terms of their size of balance sheet, but in 2 years or something, the investment that they've made, they've more than made 150% on that.
I mean, yeah, Mangalam, look, even for, Ola and Ubers of the world, they have been buying into Maruti and Hyundai cars. So such kind of a tie-ups does work for automobile, and that has been working out there. But that's where the sales numbers are coming in, not for the pure retail domestic kind of a number out there. But to my mind, I mean, as far as two-wheelers are concerned, they are priced to perfection. And I do expect, if not price correction, then time correction setting in for next couple of So the idea here is if you were an investment trader, I mean trader who was for short-term kind of a trading investment days, so it's a time to take profits out. Wait for a couple of months more on the monthly numbers, which I expect would be a weaker set of number, and then on declines because structurally things are fine. One can enter and take the benefit of the declines coming into play. Otherwise, if you are a long-term investor, stay invested. I mean, nothing to worry about. And again, the topic here is Hero MotoCorp and TVS Motor, Eicher Motors from the two-wheeler space.
Okay, all right, Dharmesh, we'll let you go at that. Thanks a lot for joining in and giving us all of those views. By the way, we have PFC that's come out with its set of numbers, I think. And for the timing, there's a sharp drawdown actually from the highs of the day. The stock has moved into the red, so we'll try to analyze those numbers in greater detail. But big drop is what we're seeing on PFC. I'll tell you what, we'll take a short break, come back. Rupen Rajguru will be waiting for us. He'll give us his view on the market, sectors, as well as themes. Don't go anywhere.
Welcome back. The Nifty is flitting between red and green, just below that 25,500 mark, just as, Mitesh was telling us earlier that it's recovered, but it has to cross that 25,600 mark convincingly. Right now, though, Angel One, another capital market stock, doing extremely well at the high point of trade with a 5% gain. We're also seeing some traction in other names as well. Hormaz joins in to talk about those movers and shakers. Hormaz.
Earnings reactions dominating. Of course, we'll get to the capital market names in just a bit, but the positive earnings reactions. L&T Finance had an analyst meet yesterday after its results, and you look at the volumes here. That's 7 crore shares that have been traded on the stock. The 20-day average is only 50 lakh shares. Interarc, since the morning, was possibly the only one that was bucking the trend when the markets were lower. There are 25 lakh shares traded, or the 20-day average of less than 65,000 shares. Pricol and Nesco are also earnings reactions. So look at the volumes on Pricol. 1 crore shares have been traded. The 20-day average is only 1 lakh shares. When you spoke of capital market names, BSE, Angel One and CDSL, but the volumes on BSE are significantly higher compared to its 20-day average. But CDSL and Angel One have picked up pace only recently, so the volumes will now start to see a pickup in comparison to their 20-day average. And on the other side, of course, there are some negative earnings reactions as well, and they too are moving on very high volumes. Amber has recovered from the lows of the day, but still 7.5-8% lower. Amber now 30 lakh shares traded, almost 15 times its 20-day average. Venky's, after another quarterly disappointment, is trading with significantly high volumes as well, 10x its 20-day average. And Lumax Industries, the numbers were fairly okay, but they announced some capex plans as well. That's 75,000 shares traded already compared to a 20-day average of just 13,000 shares, Mangalam.
Right, we take that point. Thanks a lot for that. We also have Rupen Rajguru joining in from Julius Baer. Rupen, you've heard the finance minister, you've heard the SEBI chair as well. From what it was earlier, or what was feared earlier, to what it is now, it seems like maybe they're moderating their stance on, cutting down on weekly expiries, or, actually putting the axe to F&O trading. It is a lot more calibrated than what was earlier feared. To that extent, would you back the capital market stocks right now?
Hi, afternoon, Mangalam. You are absolutely right. If you look through the language as well as the intention of the regulator as well as the finance minister, it's very clear that they don't want to regulate or rather over-regulate. They will cite caution when needed, but they will not want to interfere into the functioning of business models of various companies. And in fact, it's in line with, if you see, RBI also has been on that loosening or relaxing the regulations mode for last couple of quarters. So having said that, from a business perspective, the capital market intermediaries are definitely a good long-term structural place. And having said that, we have to be cognizant of valuations as well. So while today it has sentimentally all the stocks have gone higher because of obvious reasons, but then end of the day we have to look into the numbers and look into the valuations. And to be honest with you, probably from our side we'll wait for a valuation correction because the growth has been phenomenal. The penetration story also is playing, but the kind of growth which we have been seeing for so many quarters, that growth definitely will see some bit of slowdown, and we will probably look into better entry points into getting into these plays.
All right. Hi, Rupen. Good afternoon. Good to see you. And as always, let's focus on two factors. One is on the markets. There is some nervousness out there from those peaks that we saw last month. We have come off 600-700 points. We were bracing for fresh all-time highs. That wasn't to be. What would you do? Some part of the market believes that unfinished business is still there at the top technically, and fundamentally earnings will come through. So would you say that this market is a buy on dips market? Point number one. Point number two, I want to ask you about banks and financial companies. Now, there's a lot of interest out there, a lot of deals out there. So I'll give you options. Private banks, PSU banks, or will you look at the NBFCs? Give us the pecking order. Markets and banks and financials. Go ahead.
Sure. Afternoon, Nigel, and congratulations to the entire team for putting up such a lovely global leadership summit out there.
Hope to see you later this evening over here, Rupen. Try to make it.
Yeah, sure, Nigel. From the markets perspective, as indicated in our earlier conversation, India, yes, definitely while it has corrected a few 100 points over last week or so. But overall, in a global context, India has been a big underperformer. And that we believe was coupled by a degrowth in earnings, or rather deceleration in the growth of earnings, and plus India was not considered to be a AI beneficiary. So India was like not an AI play. So as a country, a lot of selling happened from an FPI perspective. So what is happening now is that the earnings story is slowly but surely recovering. The Q2 earnings so far have been in line or slightly better than expectations. And if I were to map it, probably 70 to 80% of the companies have either met or beaten expectations. So we are good on that. And the commentaries indicate Q3 would be stronger. So probably what we believe from Q3 onwards, we'll get into double digits earnings growth. So definitely there is recovery in earnings, and FPI flows also now probably will they have done the chunk of selling, and probably at some point of time India will become a good contra play as well. So yes, India will be or India is a buy on dip market. So any dips in the market, definitely one should be buying it.
All right, any dips? Now go ahead, complete your point.
On the financials side, Nigel. See, we are in an environment wherein the regulator, that is RBI, wants growth, and RBI has, in fact, in the previous MPC policy, have done various measures to relax the regulation. On top of it, the foreign capital also, be it coming from Japan or from Emirates or even Blackstone investing big time into Indian financial system. So that also gives that vote of confidence. And, also some of those weaker franchises are now finding a stronger player or partner out there. So from a within bank, if you ask me, the pecking order would be the tier 2 banks from a pure stock market perspective will outperform the top 2 banks. So number 3 and number 4 will probably do better than number 1 and number 2 within the banking side. Secondly, I would say NBFC as a segment also are definitely a beneficiary out of a lower rate cut environment, and also a recovery of consumption can be also played through NBFCs, because a lot of the NBFCs are consumer focused as well. So NBFCs definitely we like as a theme. Yeah, in the current environment, probably in FY27, banking, we believe as a segment will post easily 18 to 20% earnings growth. So we look into those banks, whose growth will be, say, 500 to 700 basis point higher than the system credit growth. So probably the large banks probably might grow 100, 200 basis point higher, or in line with the credit growth, but some of these others might grow 500 to 700 basis points. And in an environment where the credit costs are under control and an upcycle, these banks do definitely, we believe they will get, there are chances of them getting re-rated.
All right, 18 to 20% EPS growth is what you are expecting. The street will expect some sort of credit growth coming back, given the sort of deleveraged balance sheets that we have right now and the prospects of improving demand. Thanks a lot, Rupen, for joining in. But you did speak about the Global Leadership Summit and the possibility of you being there in the evening. Meanwhile, we'll cut across to what's happening out there itself. Prashant Nair in conversation with some leaders of the financial sector.
I can draw a parallel with some of the markets I've had the privilege to work in, and how you move people from being savers to investors. And it's a multi-pronged approach you need to have. So, to simplify it, I would say you need to have the technology. Part of the technology is here, but you need more technology. You need to have the products. And when I say products, there's a complexity, because it's not only the investment products, it's also the digital product, which is the whole customer experience. People don't relate to a financial product. They relate to an experience. And then you have the education, which is extremely important. I would say, if you take a look at today, the state of literacy, financial literacy, there's progress that needs to happen globally, but I think India, is part of that story.
Just to press on that point, Mark, when we talk about, we speak with wealth managers, etc., all the time, and you get the sense, well, it's the client out there already has, every client has a, so, and yet there is so much excitement, and people are, and it's a booming industry. I know you have strong thoughts on this, but go on.
Yeah, so Wealth management, I think, needs to be defined properly first. There's so many versions of wealth management, and you can't talk about wealth management without looking at the individual segments. Wealth management, so first of all, the word wealth can be a little bit controversial sometimes. Wealth management should be for everyone, okay? The democratization of wealth management is something that should happen. Very often, and I think when you take a look at the state of the wealth management industry in India, it's a little bit of an elite. So there's I would say a few thousand families that have access to wealth managers. Wealth management can include elements of advisory, so investment advisor, there's elements of succession planning, there's all sorts of different things. And depending on the segment you look at, the needs and requirements will be very different. At the basis, I would say wealth management should be advisory, fiduciary advisory for everyone, whatever your level of assets.
Welcome back. Well, a few minutes left before we wind down trade, but let's welcome Mitesh Thakkar back on the show. Hi, Mitesh. Almost done with the week, and good to see at least we defended the crucial lower levels, both on the Nifty, the 25,400, and on the Nifty Bank, the 20 DMA. What is your call first on the Nifty? You've called for a bounce. We got a bounce on both those two. Book some profits or carry the position and fill us in with fresh trades.
I think, Nigel, my idea would be to take some profits off purely because Nifty is underperforming. But if you have Bank Nifty longs, I think that's a different story. Bank Nifty is still looking stronger to me and can possibly head towards 58, 150, 200. So while the Nifty can also move along with that, I think it's the Bank Nifty which will be more rewarding, and that's where the focus should be. On the stock side, a BTST on Asian Paints with a stop at 2602 for targets of 2640. And Angel One, I think, that's the stock which is after sideways consolidation is breaking out. So BTST with a stop just below 2600 for targets of 2635.
Interesting one. Angel One, obviously the capital markets team doing well. Asian Paints has been doing well also since yesterday, ever since, the street has tried to believe that maybe the worst of competitive intensity in the paint space is behind, and Asian Paints obviously yet to report its numbers. On the 12th is when the company reports its numbers. In fact, let's take this conversation further with market expert Sudeep Bandyopadhyay joining in. Sudeep, up until the resignation of Rakshit Hargave, everyone was wondering whether Birlas will continue to disrupt or not. Once that happened, all the theories started coming out. The worst of competitive intensity being behind, the worries in the paint industry in terms of demand, etc. Now also behind in the second quarter, things looking a lot better. These stocks have seen a price correction, time correction, multiple correction as well. Where do you stand on this space right now?
Well, Mangalam, I think the competition intensity isn't going to reduce. I think, yes, the change of CEO will probably slow down the pace at Birla Opus briefly, but I don't think it's going to go away. There is competition, and there is, there are challenges for the leader, which is Asian Paints, because market share gain by Birla Opus will come at their cost and the cost of other leading players. So I wouldn't, dismiss the competition and, subscribe to the view that we have seen through the worst in this industry. Of course, Q3, Q4 should be better for the overall industry because, the monsoon is normally a slow season for the paint industry. Now that season is over, so things should pick up for the overall industry. But competition is not going to go away, and I'll be very careful. The valuations are not cheap. Whether you look at Asian Paints or Berger Paints, valuations are reasonably full. So I will be very, very careful before I recommend a buy in any of the stocks in this industry.
All right, we take that point, Sudeep. We'll continue our conversation after this short break. Just take one and come back. We'll also track the closing of the market. It's recovered from the lows, still holding around the 25,500 mark.
Welcome back. Well, we have still a few minutes to go, and Sudeep Bandhupai is still with us. Sudeep, wanted to ask you about two stocks. I think Vedanta is a stock in the past that you have been bullish on, if I remember correct, and the stock has moved up considerably. At current reckoning, what is the view? It's at a 52-week high. And on the flip side, Hindalco, that's the one that's actually been a better, safer bet on aluminium. But that's got itself into a bit of a tizzy because of the big capex spike, and now they're talking about further debt. Your view on them?
Well, Nigel, you're absolutely right. I have been positive on Vedanta for quite some time. And I have also mentioned that if you are a bit aggressive investor, Vedanta is the stock in the metal space for you. Yes, the aluminium overall is a very hot sector, and that is contributing significantly to Vedanta's overall performance. But beyond aluminium, even the other segments are doing pretty well. We know the kind of return zinc is giving. The silver component of that is significantly contributing to the zinc's profit, and through dividend it comes to Vedanta as well. Other businesses in the Vedanta stable are also doing very well. We believe that there's a metal super cycle which has started, and it's going to continue for some time, which will definitely benefit Vedanta significantly. And on top of everything else, as you are aware, the demerger which they are working on, there are challenges, ifs and buts, but I strongly believe that it's going to happen. It's just a matter of time. They are still talking about completing it within this fiscal, and I somehow believe them that this will be possible with most of the issues getting resolved.
All right, we take that point. Just before we talk about market close, a couple of stocks I want to bring your attention to. One is CCL Products. Reported a very, very good set of numbers day before yesterday. The stock has been doing well yesterday and today as well. Has moved higher by about 5%. So this week's gain on that counter at about 20-22%. The other one, which has taken everyone's breath away, is Thangamayil Jewelry. Their foray into Chennai last year has actually been a very strong one. Higher gold prices and some additional, income that they made on some of the unhedged gold that they had. About 10% of their overall portfolio has done well for their margins and overall performance as well. So it's up 10% yet again today. In fact, if you pull up the weekly chart of Thangamayil Jewelers, it's up 55% in this week itself. The last 5 trading sessions, and the Nifty is actually down by about 1%. The mid-cap's not too well either. This is a stock which is up by almost 55%. The last 7-day gain at around 30% as well. Any of these jewelers that you like, Sudeep? Because, be that as it may, even Titan, for what it's worth and its valuations, has actually moved to a record high. Titan was at a record high just today.
Mangalam, I always like Titan, and I have been recommending Titan for a very, very long time now. The second stock which I like from this entire pack is Kalyan. Look, you have to focus on pan-India players who have a wide distribution reach and who are well hedged. I don't want to speculate on gold price moving up and down when I'm buying a jeweler. Thangamayil may be moving up because of the unhedged portion of the gold which they're benefiting, but tomorrow it may work the other way around. And these are very, very region-specific players who was outside of Chennai in Tamil Nadu, and now they're moving into Chennai. There is some excitement around it, but I think these are a very, very narrow plays, and I don't think I will recommend these stocks to my investors. I will still go with Titan and Kalyan.
Still go with Titan. It's interesting because Thangamayil Jewelers told us that, their hedged proportion has increased from 70-75% a few years ago, now up to 95%. So they're not as hedged. And the Chennai foray has actually done well for them because it was nothing last year. And now it's 20% of their revenues. And they believe the next 6 stores that they open will be in and around Chennai itself, which is obviously more margin accretive for them. Be that as it may, we'll take your point and take your leave on that as well. Sudeep, hope you have a very good weekend. And as we start to begin to wrap up of on the markets for this trading week, just keep an eye out on a few stocks. We have Bharti Airtel, which is now at the lowest end of today's trading session. Large part of the street would have believed that maybe after the supply that came in from Singtel, the stock would find a bit of a bottom. That's not the case to be. In fact, it's holding at around that 2,000 mark, down almost 100 rupees in today's trading session. Devi's Lab is the other one, which is lower post its numbers. The profits were a bit of a miss. Tata Consumer, after reporting a decent set of numbers in line, and also the management guiding for better operational margins going forward, the stock has seen some bit of profit taking. Tech Mahindra is lower as well. On the way up, though, today we had Shriram Finance, Adani Ent, Bajaj Finance, Bajaj Finserv, Tata Steel and Britannia. The management of Britannia fairly confident of volume recovery in the second half of this year in their conference call. In the broader end of the market, it was the finance themes that did extremely well. L&T Finance was up 11%. Angel won the capital market theme. BSE as well was among the top gainers today with a fair amount of volume. KFin doing extremely well, along with Vodafone Idea, which was up 3.5%. On the way down, poor numbers coming in from Amber Ent took that stock lower. ABB India as well, margins were weaker than expectations. The ordering activity was lower than expected, and that stock down about 4%. We saw some weakness in PG Electroplast as well. Delivery continued its decline post its numbers that came in yesterday. The stock was down about 10% yesterday, down another 3% today as well. On the way up, we had Thangamel Jewelry, like we just spoke about, 55% higher this week, and Venki is down about 9% in today's trading session. All in all, the Nifty ends flattish, but in no way is that a weak session, because we saw a 200-point recovery from the lows, and that's limited the weekly loss of Nifty to just about 0.8%. The Nifty Bank star of the show up nearly 800 points from the lows on Friday. With that, we wrap up on this edition of Closing Bell, but you stay tuned to CNBC TV18. More insights from CNBC TV18's Global Leadership Summit on the other side.